All right. Hey, everyone. I'm back. We're back here. It's now just a little after 3 p.m. Eastern Time. This is my analysis stream. I was streaming earlier for the market open. We had a NASDAQ trade that worked out. If you want to see how that played out, you can go check out my channel for the stream and you can see how that worked. It was a very tough trade. And but I actually got out with like a $350 profit or whatever. Considering I'll take that in this environment. I mean, it's very tough today, very tough. For most people, it's probably a good day to just not trade. Okay, with the way the Nasdaq is moving around, it's wild, moving 10 points at a clip, right? 10 points like per second. That's 40 ticks per second. So, adjustments have to be made for something like that. And we had some good lessons from earlier. So anyway, check that out. Otherwise, if you're new to the stream, welcome. All right, my name is Mark Principato, and this is my analysis stream. I do this every Monday around 3 p.m. Eastern Time. I've been doing this for a few years. All right, so in this stream, I'm not going to use the Trade Scanner Pro, even though I have the little banner up at the top there, because that was the earlier stream. In this stream, we're going to be taking a look at how the markets are playing out, and we're going to evaluate what type of scenarios we may be seeing each week across these various asset classes. We'll start with Bitcoin. We'll take a look at the NASDAQ. If you guys want to see some altcoins, let me know. Say hello, okay? Don't be shy. By the way, I'm streaming from the greater New York City area, also known as Northern New Jersey. And that's that. You guys know that by now. I usually get my regulars in here. So let's get this thing started. All right. Now, first thing I like to go over each week is the economic calendar, because you need to be aware of what scheduled events are on the calendar. They can move markets, especially if you're involved in any intraday activity. Now, keep in mind, markets are very sensitive right now. So there may be surprise news items that could move the market dramatically, unexpectedly. This is why I don't pay attention to news items. I pay attention to the price action. Usually it's reflected in the price pretty quickly. And you want to be more in line with the price action or the market intent rather than trying to sit there and interpret the news. But on that front, what do we have this week? Well, beginning tomorrow, which is Tuesday, we have the Bank of New Zealand. They have their rate announcement. In light of all the stuff that's going on in the world right now, I don't really think anyone cares about the Bank of New Zealand. But if you're in any Forex pairs that are relevant, maybe you want to keep that in mind. All right. But I wouldn't worry too much about it. On Wednesday, we have the FOMC meeting minutes. So again, if there are any surprises or something unexpected in that report or whatever, it could move markets. That's usually at 2 p.m. Eastern Time, the FOMC meeting minutes. Now, on Thursday, we have the CPI report. That's at 8:30 a.m. Eastern Time, usually, and that's a big market mover. Next to FOMC meetings and non-farm payrolls, CPI is the next biggest thing. That's especially important if you day trade. So we have to see the outcome of that. Now, I don't stream on Thursdays, right? My next streaming, I stream on Wednesday, and then I stream again on Friday at the market open. So Thursday, you're going to be on your own for that one, but just be prepared for that. On Friday, we have the PPI, which is, I guess, the producer price index rather than the consumer price index. I believe it's also a 8:30 a.m. Eastern Time number. Double check those timestamps because sometimes I get those wrong. Double check the timestamp, but it's either 8:30 a.m. Eastern Time or it's 10 a.m. Eastern Time. Hey, Hussein, man, this guy can't get enough of me. He was here earlier too. How you doing? I know the altcoins follow BTC, but if you have time, love to hear your thoughts on. Sure. Yeah, that's and then, you know what, Hussein, I do have time in this stream because I'm not going to be doing the Trade Scanner Pro portion like I used to do because there's no point, right? You saw all the action at 9:30. So I'm not going to do it again. And especially this is not really a good time to trade to begin with, as I've told everyone for a long time. So yeah, sure. Take a look at ADA, no problem. Anyone else, if you want to see an altcoin, please share it in the chat. And I'll attempt to take a look at it once I get through my analysis portion. So anyway, yeah. So on Friday we have the PPI report, and we have Michigan consumer sentiment. That's what it said on my calendar. Now, I thought we had Michigan consumer sentiment. Was it like the Friday before, was it? So I don't know if this is, I'm not sure if this is correct or if they have it again, but it said Michigan consumer sentiment. But I specifically remember we were in a trade and Michigan consumer sentiment came out and the market sold off all day and I missed a huge trade. Okay. And that might have been the Friday before. Not the previous Friday, but the Friday before. I missed a huge trade. And then what was today? Today's Monday, right? Yeah. So and then the next day I missed that huge trade. And then the next time we came on, I took a bunch of bad trades, right? And I missed a good one and I took a bunch of bad ones. Anyway, that's what happens. So, but that's what the calendar says, Michigan consumer sentiment. That's usually at 10 a.m. Eastern time. Just double check because obviously that number has some meaning, some significance these days, okay? All right, so that's the economic calendar. Now, so let's get into the analysis portion of the stream. By the way, if you're new to the stream, I want to welcome you once again. Do me a favor, press the like button. Here, I'm going to press this over here. Press the like button. Please subscribe and to get notifications. I am making an effort to grow the channel and to really, my goal is to help you out and to really give you some perspective in this game. It's a very hard time right now. And if you're ever going to need perspective, this is the time. All right. Not when things are easy. So anyway, just want to mention that. Now let's get into the analysis portion of the stream. Hopefully you read my TradingView article yesterday that I published on TradingView. And this is the chart that I was highlighting. And this was the scenario that I was highlighting right here. So I talked about specifically touching 76K. And I also mentioned it was possible that we can go lower. But look what's happening here, right? We went to the low of 74, whatever, 74,420. They like that 420 number. Anyway, 74, right? Whatever. And if you notice here, this can get you into trouble if you're missing out on the big picture. Because what's happening is we have the failed low configuration. I've been talking about this. This is the failed low. We had the lower high, which was the arrow was pointing to. We made the lower low, but what you have to watch for is the failed low. Failed low is like a double bottom, right? And so far we have the beginnings of it. Look at today's candle. So we touched that low, and we're now basically like a doji formation. You see that? If tomorrow we close with an inside bar or some kind of bullish reversal, like a pin bar or inside bar, watch for the bounce back up. This thing can easily, today alone, we were at 81K. The top of today's candle is 81K, right? So if this thing bounces off of the failed low, then you're looking at like low 80Ks again, 83, 84, 85 area. That's very within reason, and that scenario can play out this week. Excuse me. So that is one possibility. Now, why would I be bullish on this? I would also go ahead and say that these are investment levels as well as swing trade levels. If you want to accumulate Bitcoin or altcoins at good prices, this is a better time, especially compared to the highs, right? So I keep arguing that because when we look back at the wave count, wave one of this structure, of this impulse is over here, and wave one is around 64K. As long as we don't touch that area, as long as price does not overlap wave one, then that means we're still in a wave four. And if wave four bottoms here, which is possible, if it establishes a bottom, especially with a failed low, double bottom, failed low configuration, if we do something like that, then wave five is likely. Now, it doesn't mean wave five is going to unfold this week. It may take a few months. But if this is the bottom of wave four, a wave five test would be a test of the high, meaning we go back to 109. That can take some time, but all it needs is some sort of catalyst to drive this thing. If you want good prices, these are the prices, not when it's at 100K. All right? Ask all the people that made that mistake the first time at 100K. They thought they were investing in, oh, this thing's just getting started, because you listen to all the fake gurus, and here you are struggling and suffering and at the mercy of the market. So hopefully this thing finds its bottom. That is, but for this week, I'm anticipating a retest of the low 80Ks. That's ideal for a swing trade. So there's no confirmation yet on this time frame, but you can use a 4-hour chart, you can use a 1-hour chart, especially at the speed of this market. You can also use the daily chart, which is what I have here, but you have to wait a couple of days, obviously, because there's no confirmation in place right now. Confirmation is key. I repeat that all the time. Now, what else can happen here? If this level breaks, hey Nugs, there he is. Man, all my all my AM guys, all my my day trade time guys like to follow. Man, you guys can't get enough of me, huh? All right, that's cool. Hey, I like to see you guys too. So if we break this support, hey Dejan, how are you? Good to see you. Long time no see. If we break the low, right, or we just keep going lower, 73K is the next support here. That's our previous all-time high, dating back to the pre-election days, like right in this area over here. Okay, see, oh, I'm blocking it with my head. Hold on. This area right here. Okay, so that's, I believe, the 73K high. Let me see. Yeah, 73.6. So this is a 73.6 right here, right? That's the next support level. If this thing continues lower, that's the next place to be looking for buying activity, anticipating reversals. If that's broken and we're pushing 70K, then that puts the 64K level in play, meaning it increases the chances we get there. If we get to 64K, that cancels out this impulse, which basically what that means is it reduces the chances that we get a wave 5. So please keep that in mind. That will affect your, or should affect your investing expectations. If we overlap, that means we're most likely in a consolidation. So in that scenario, I wouldn't be aggressively trying to cost average into this thing. I would maybe cool off a bit, maybe take some time off, maybe just invest smaller. Does it mean Bitcoin's bearish at that point? On the short term, but big picture, it just needs to find a new impulse structure. And as you know, Bitcoin generally has a bullish bias, as we know most markets do. So you just have to wait for it to turn around again at some point. And of course, you need the fundamentals to align for that. But that's where at least we use these levels and we use technical analysis to help shape our expectations and to help us manage risk better. That's the best we can do. We cannot forecast the future. All these clowns that, hey, Bitcoin going to be at 1 million by tomorrow, right? You want to choose to believe those morons? You get what you pay for. No one knows the future. They do that to just basically capitalize on your attention. I'm not going to get into that whole rant right now. You guys should know that. All my regulars know that. But if you're not a regular, please stop being fooled. So all we can do is look for evidence from the market, and then based on that evidence, we can gauge risk. And then from there, our job is done. Once the risk is gauged, it's up to the market to do its job from there. And either we lose because we were wrong, or the market's just doing whatever it's doing, right? Or it works out, right? So, but there's many ways to manage risk. It's not just a stop loss. And when you're investing, dollar cost averaging is a way to manage risk, but your sizing strategy has to be relative. It has to be relevant to your account size. I'm not going to get into all those details either, but there's a method to doing it without wiping out your account, which can happen very easily if you get too big too fast, especially in this type of environment. All right, so the main scenario for Bitcoin this week, I'm anticipating, is the reversal, right? Because we got the failed low, we got the double bottom developing. This is good for taking some bites for investing, right? Dollar cost average, good place to be buying some here relative to your account size. And it's also good for a swing trade once the confirmation appears. When it comes to investing, you don't exactly need confirmation. You could step in front of the market a bit and you control your risk with sizing. But when it comes to a swing trade, it helps a lot to have confirmation because you're waiting. You're not going to get the best price, but you're more likely to be on the right side if you wait for confirmation. So it's beginning, right? We have one candle. The candle needs to close. The break of this candle high needs to happen. So that's going to happen tomorrow, obviously, because this candle is still open. But this is the scenario that I'm anticipating this week, and I'm anticipating a retest of 83, 84, 85K, something like that, which would bring us back into the middle of this range. Great place to exit a swing trade. That is not where you should be saying, oh, it looks safe now, maybe I'll buy. That is not where you should be saying that. If you're interested in longs, we are at the levels right now, not at 85K, not at 90K. That's where you should be taking profits. And all the people that are recognizing the opportunity now will be selling it to you at that time if that's when you decide to buy. Make sense? Okay, so that's Bitcoin. Let me know if you guys have questions. Now, I'm going to jump over to the NASDAQ real quick, and then Hussein, we'll get to Cardano. So let's just take a look at the Qs. All right, I'm going to use the Qs for this because the Qs, I could use the NASDAQ futures, but I went over that earlier. Let's look at the Qs, right, which is the ETF. Now look at this. This is just dramatic. Where are we at right now? We're still at 422. That kind of sucks, to be honest with you. But it's at least the candle is up today. This says we're up, so basically we're back to where we opened. This thing was as low overnight. This thing was as low as 400, basically 399 or 400. That is dramatic. Let's look at a weekly chart, okay? Because it gives us some perspective here. Look at this. So we've been, ever since Wednesday, we've just been in a straight line. And a lot of people are probably taking a lot of pain, getting margined out. Unexpected, right? No one was expecting this. But you can't get misled by all the nonsense. There's a lot of hype out there. There's a lot of overly reactive opinions and blah, blah, blah. Don't pay attention to people. Pay attention to price levels. Look where we are. All right. I talked about this on Thursday evening when I talked about my investing. I had like an investing stream where I talked about how I was buying the bottom of the Qs. That stream is, you could watch the video. It's on my YouTube channel. All right. I explained where I was buying. By the way, this thing is against me. I've dollar cost averaged. My average price is 463. So this thing's like $4,000 against me, whatever. I have 90 shares of the Qs, right? But as I said in that report, in that stream, this was an investment. This was my plan all along. Like it wasn't like a swing trade that went bad and I just, let me add to it. It wasn't that. I was purposely buying 10 shares at a time. Obviously, I bought a little too early because I wasn't expecting to move this dramatic. But on Thursday evening, I said, this thing could go to 420. This thing could possibly go to 4 even. And we went there like today. So, do I think it can continue in a straight line? I think the probability is low because, how much lower can it go in a straight line without any type of bounce? Is today a bounce? Well, it's trying. Let's go to the 4-hour chart. Look, this is the 4-hour chart. We were obviously much higher, right? And we gave it back. But this is what a bottom looks like. It's trying, it started gapped lower. It closed the gap, as you can see here, right? Let me make that big. It closed the gap. Okay. It went dramatically higher before giving it back. All right, whatever. Now, what we want to see here over the next few days is we want to see a failed low or double bottom, just like that Bitcoin pattern. That it would be ideal to see on a 4-hour chart. If we get something like that, that will at least give us a hint of temporary stability. Now, I know we can go on about the tariffs and blah, 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 right? I understand. And this is a deflationary situation. I think it was engineered purposely, and look where oil is, right? Oil was completely deflated. And that was one of their goals, in case you don't remember, but they wanted to get the cost of energy lower. Well, I guess this is how you have to do it, right? To reduce inflation and to get that under control. And yes, there's going to be pain involved and it's harsh, but we have to look at the big picture. I don't care what side politically you're on. We have to look at this from what's actually happening in terms of price levels And are there opportunities here? And where would be good prices to be getting long? Because if you were getting long over the previous few days, you took a lot of pain, right? And now, like for example, I'm at the mercy of the market with my 90 shares. Am I going to continue to add? No, I'm not. I'm going to keep my 90 shares and just wait until this thing recovers a bit or stabilizes. I mean, it's the Qs. So there may be more pain in the future, but what am I going to do? It's if I have to hold on to it for a few months, I'll hold on to it. Again, it's the Qs. It's not like GameStop. So that's the way I'm looking at it. Yes, it's risky, but I'm keeping my size under control. I'm not going to continue to add to it. My goal is if we can get some stability here on the Qs, which maybe today is the first day, if we can get some stability, I'll add 10 more shares. I'll have 100 shares, and then I'll sell a call against it. I don't think I'm going to be able to get away with a profit on this position. So my hope is that we can at least get back up to 450, right? The 450 area, something like that, which is not completely unreasonable, right? Today's high was what? 443 was today's high. 443, okay? And we're back to 422. So if we could do that in a few hours, I think reaching 450 or 460 over a week or two is within reason, okay? I don't think this is the bounce and then we're going to lower lows. I don't think so, but hey, I could be wrong, right? So the point is, I think we're in high probability bounce territory on the Qs. Now, I'm anticipating, when we go to the bigger picture, I'm anticipating, if you look at this formation here, what I'm anticipating is a right shoulder to develop in this area, which means a significant rally should, or some sort of retracement is likely if we're going to get that type of formation. Now, are we going to get all the way back up to this level to form the shoulder? I don't know, right? That would be ideal if we could get back above Wednesday's high, but I don't want to be overly optimistic. If we could get somewhere again, like somewhere, in this area, if we could just get back up there and sustain that a bit, I'll be happy with that. Okay. I mean, today's Monday, so we get the whole week for this candle to play out, the current candle. All right. Makes sense. Now, if you look at the monthly, look at the monthly. Man, that's harsh, right? So maybe we get some kind of small bounce, but this has a lot of room to explore lower prices. That's the monthly NASDAQ, right? So I'm not, as far as like longer term, a lot of people, oh, this is just a blip. I don't know. If we're going to have a recession and blah, 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 this and that, then this structure is probably not going to improve itself anytime soon. We're going to need some fundamental changes. We're going to need expectations of the future to be positive again. And that's going to take some time. And that also may require lower prices. So until I see stability, I'm going to lean on the not so bullish side, even though the bigger picture really hasn't changed a whole lot. The short-term momentum is not favorable, and I don't want to carry a position until the market stabilizes again, right? When I see more of a stable situation, then I'll be more comfortable, buying small pieces and trying to accumulate a position. But right now, I'm just looking to reduce risk. Does that make sense? So as far as this week goes, I'm anticipating a scenario for the Qs to at least get back up into those 460s, 450s as the week unfolds. Maybe some of these news items that come out, or maybe we get some surprise news. Who knows? We do need a positive catalyst, and I would like to see a candle that looks like this. Okay, something like that. Can we go another candle lower pretty straight? We can. Right? So I'm prepared to hold for that. But what I'm not going to do here is I'm not going to overreact. I don't have huge size on. I'm not being threatened for a margin call or anything like that. Not even close. I'm not going to buy puts here. I could, that's one consideration. You could buy puts, but they're going to be very expensive. And you're buying them, at an absolute potential low here. Like if there's going to be a low, it's likely to be here. You're going to buy puts now, right? If you're going to buy puts, you should have been buying them up here, or at least the break of the low or something. Not now. So just got to hold on and manage risk. I'm not going to add, and I'm going to look to exit the position. if I get that opportunity. Does that make sense? Hey, Sean. Sean is back too. Man, all you guys. Sean was here earlier. Good to see you, Sean. So anyway, that's my NASDAQ outlook. And it's not very optimistic, just a brief bounce to exit or to reduce. Because I'm not anticipating right snap back up to the top sort of thing. You know what I mean? I'm not anticipating the V bottom like we had back in 2020. Now, maybe the Federal Reserve surprises everyone with a rate cut like they keep trying to pressure him to do. But I don't know. Powell doesn't seem to want to do that. So maybe they'll get some some scandalous information on him, and maybe they'll force him to do it. I don't know. I'm just guessing. Okay, I will listen back. Okay, no problem. I'm going to do it right now, Hussein, actually. But okay, no problem. I'm going to get to that now. So that's my NASDAQ. Let's take a look at now. Hussein requested Cardano. So we're going to take a look at Cardano here. All right. So let me just move my chart over. All right, 2-for-1, Sean. all my AM guys come in the afternoon. That has to say something. I must be doing something right. Otherwise, you guys are like, I don't want to hear this guy a second time. 1 hour was enough, right? No, I appreciate that. All right, so let's go to Cardano. USD. Okay. And now, so Hussein, you know that Cardano is pretty much going to follow Bitcoin, but let's take a look at the weekly chart, right? The general idea. Because, Bitcoin was doing pretty well up until like yesterday. And then they caught up to it, right? The bears caught up to it and it got hammered. The Trade Scanner Pro called a really nice trade in that, by the way, which happened to work out on the hourly. We could take a look at that here in a minute. But so here's Cardano on the weekly chart. Now look at this. Generally speaking, this structure on Cardano is the structure that's in play. This right here, that's still in play. So what you're looking at here is just like a nasty wave 4 pullback is what that is. Now, is that really a wave 4? I see a lot of overlap here. So even if we count this as 1, right? 1, 2, if this was a 3, no overlap there, so that doesn't count. 1, if this was a 1, 2, 3, so if this is the top of 1, then we got overlap here too. So you see that? So this is not an impulse. This entire structure, right? This entire area is not an impulse. Okay? Because there's wave 1s and wave 4s are overlapping each other. So it's most likely just a big consolidation. All right? So that should help to shape expectations. Hey, Grigoris, how are you? Also want to hear about Cardano. Oh, cool. All right. Well, you're just in time. So this is basically, when I'm talking about the wave counts, the whole purpose of the wave counts is to give us a sense of expectation. It's not like a hard and fast forecast where you can expect something absolute. No way. It's just a way to gauge, should I anticipate trend continuing or should I anticipate it not continuing? Like what should I expect? What's within reason so that I can manage risk, right? So this situation is a consolidation. If we're in a consolidation based on the wave counts, then all you're really interested are the levels, right? Support and resistance. That's all you really want to know. And I'm going to point those out here. These are your levels on the weekly chart. And we can argue that we're at a level right now here. So just to make this a little easier on the eye, let me make this bigger first of all. I know my head is in the way. But so there is some support here on the weekly. We'll give it that. All right, we'll give it that because it goes back. Look, it goes all the way back to here. So there's some support on the weekly right now. You have some resistance here, and clearly you have resistance here. These are your levels, okay? And we are certainly we're not at a resistance level right now. We are clearly at a support. Not only that, even though the week just started, you have a bullish pin bar. Of course, the week needs to close for that pin bar to be established. This pin bar can change dramatically throughout the week. But if Bitcoin holds and Bitcoin keeps its act together, then you have a nice buying opportunity right here. That's how I would gauge that. Now, if you're going to look at it from a swing trade perspective, your stops are going to have to go somewhere around here, or just use the Trade Scanner Pro stop, because that's also going to be very relevant to the price action, especially if you're not going to use the weekly chart. If you're going to use a smaller time frame to take the trade, then the Trade Scanner Pro would be very useful as far as defining your risk. In fact, let's turn the Trade Scanner Pro on here. Let's see, is there anything here? Let's see. On the weekly, I don't have any trade signals, but I do have a heads up, interestingly enough, for a long. Okay? So you can use that. That could be helpful information. This is a good place to dollar cost average if you're interested in Cardano. This is, again, a good place for swing trades. The same story as Bitcoin, pretty much. You just have to know how you're defining your risk. How about AVAX? Well, okay, Nugs, we could take a look. Once I get through this, we could take a look. Because again, I'm not doing Trade Scanner Pro today. So we can take a look, right? That's my AM session, as you guys know. For those that are new, I know I keep repeating myself. So, but Cardano looks good here for a long. Again, now if Bitcoin breaks, then this is going to break too, most likely. So you have to understand, what are you going to do if it breaks? Are you going to just take some small size, and if it breaks, you're just going to try to hold on to it? You're going to bang out of some of it? You know, if you're trying to dollar cost average, remember, when you dollar cost average, you're not exactly using a stop loss. Like it's not a very compatible strategy to use a stop loss and dollar cost average. Dollar cost average means you're giving the market room, but you're also taking the risk that the market can go dramatically against you. That's part of the deal when you dollar cost average. If you don't like that idea, then you don't dollar cost average. You take more of a sizable position, but you use a hard stop, right? That's where the Trade Scanner Pro comes in. So I like this as a long, just like Bitcoin. You know, just like I like the general area for Bitcoin, and I think you could see something like this over the next few weeks, back up to that resistance. If anything, you know, we're not at a resistance, we're at a support. What's missing from this picture is the confirmation. So this is a weekly, right? So we go to the daily chart, right? Now we have the daily pin bar. It's going to look like the weekly pin bar because we only have one day of the week so far. The weekly pin bar is going to continue to change, but this is going to close at whatever, 5 p.m. or 6 p.m., whenever the closing time is for this thing. We break the high of this daily pin bar, you have a buy signal off of a support. So it's attractive for a long. I like it. If you want to be more conservative, you can wait for a trend line break, right? But you're going to get a much worse price if you wait for that. Much worse price. Does that make sense? So how you go about this is going to depend on, are you looking to invest or are you looking for a swing trade? Day trades, don't even bother. So I'm not even going to address that. All right, so that's Cardano. You guys have any questions about that? Let me know. Let's take a look at AVAX, right? AVAX, is it? Yeah. So that's AVA. AVAX USDT. So let's see. Remember, these altcoins, while Bitcoin serves as like their leader, kind of like the S&P is like the leader for the stock market generally, Bitcoin serves as the leader, but each coin is going to have its own situation. And so you want to be aware of the levels, right? And stuff like that, because you can't treat each coin like a copy of Bitcoin. Some of them are going to be relatively weak. Some of them are going to be relatively strong. So what's going on here? This is AVAX. I see a lot of overlap. I'm looking at a weekly chart. The first thing I notice is a lot of overlap. So you don't have any impulse waves here, which means no trend. This is range bound, right? Consolidation. You're at the range low. Look at this. You have a double bottom situation, right? You have a low, you have a failed low over here. And not only that, in this failed low area, basically it's relative to this low, right? You have a little mini double bottom. Well, I like to call a compound double bottom, because you have that one there, and then you have this one, right? So that's compelling for a long. I would be interested. I don't trade this one, or I don't invest in this one either. But if you are interested in this, this would be a consideration for a long. I certainly wouldn't be shorting it here. This is a very high risk area for a short. you have a pin bar. Now just keep in mind, we've had pin bars recently too that have gone nowhere. Look, this pin bar was nice, right? And we're back to that price. This was also a nice little pin bar situation, and it went lower. So remember, there's no guarantee here. We had a pin bar back here, and that turned out to be okay. Of course, that was in line with the election. We had a catalyst behind all of these things. So catalysts are a part of the deal. Technicals won't help us identify a catalyst. The catalyst has to happen, but the technicals will help us identify levels where we can quantify risk and then decide, do we want to take risk here? This is an attractive level for risk, in my opinion. Yes, it can go lower. If Bitcoin breaks, this is likely to go lower. But you have to decide, can you handle the risk? Again, this is good for a swing trade. This is also good for an investment at these levels. This is a weekly time frame, by the way. So, this can take weeks to play out. If it bounces, if you get the reversal here over the next few weeks or, quarter, right, and you get a reversal that starts working its way up, you're going to need a pretty powerful catalyst. You're going to need something to Bitcoin is going to be the strategic reserve, blah, blah, blah. Bitcoin is going to be whatever it is, okay? Whatever nonsense they come out with. Then a good place to take profits or to gauge profits from would be the middle point of the range. I wouldn't be overly optimistic and expect, the range high. It can happen, but I wouldn't be like, oh yeah, I'm going to hold for that. The idea is if you get prices now, you get some good prices and you have an opportunity to sell here, you take some money off the table, right? That should be part of your plan. If we get to back to that midpoint area, take something off the table. It doesn't matter how great it looks or whatever, or if you want to wait for some bearish activity to develop before you take something off, but that should be your general plan. Take something off at the midpoint and then try to let some ride to see if you can retest the range high. And then that would be another place to lock in profits. Remember, locking in profits is an important part of this game that people hesitate to do when things look really good because, whoa, but I'm winning and I want to win more. When things look their greatest, that's usually when you should be taking something. You don't have to take everything off. Like with those position on the Qs. I had 30 shares that I had held onto from a previous trade. All right. And that previous trade worked out very well. I had 180 shares of the Qs in that trade. I dumped 150 shares on the way up to 495. And I held on to 30 shares in case it went higher. Well, and I said, if it pulls back, I'll buy back. Well, we pulled back all right. And I bought some back, but that was the plan. So that's how I'd go about that. Does that make sense? That's AVAX. All right. Any other questions about that? So let's take a look at anyone else want to see any other altcoins? Pretty much went through the ones you guys asked here. Any other altcoins? While you guys are coming up with an answer, we'll take a look at the bond market. See how the bond market's doing today. What's up with the bond market? Because this is going to be important going forward. Bonds right now are minus almost 1%. That's on the weekly. Let's go to the daily chart. Well, it's the same. All right. So bond prices pulling back, that means yields are on their way up again. Right? That's what that means. Bond prices are in a place to pull back. So, look, I even have a resistance on this chart that it has touched. And we're getting an outside candle, a bearish engulfing candle. Not a good sign for interest rates if we want lower interest rates. This means rates are rising. That's what that says. All right, so something to keep in mind. Rising rates aren't exactly something the market wants to see right now. So maybe that changes with the CPI report. Maybe that changes with one of these catalysts, these potential catalysts that we have coming out this week. All right, so something to keep in mind. Don't lose sight of the bond market. Let's take a quick look at the S&P. All right, so I'm going to go to SPX USD. All right, well, this is the same as the SPY. I might as well look at the SPY, right, which is the ETF. This is the SPY. And same story as the NASDAQ, but what's it doing right now? We're minus almost 1%, right? This thing's minus 3.5 points. We were much higher earlier. So it's just the NASDAQ and this thing are the same story. All right. And we just have to wait. We're in bounce territory, and that's what I'm anticipating from these things. But there's just no bounce. We don't even have a pin bar here. Nothing. All right. It'd be nice if we had a pin bar. Maybe we get the pin bar tomorrow. Maybe we get an inside bar. Remember, it's always about maybe. If this, then that. Right? It's not, well, I think it's going to go higher, blah, blah, blah. No. Never think in absolutes. It's maybe this, maybe that. Probability this, probability that. And in a situation like this, probability does favor the reversal, but we're going to need something to spark that. Maybe the administration can come up with something, because I don't know. I don't know. I have not seen a move like this in a very long time. So I don't know what to expect on something like this. Generally, all I can say is probability favors the reversal. Do we get it? I don't know. And how far does it go if it reverses? I don't know. But I tell you one thing, I'm not expecting a move back up to here, right? Up to here, or even the previous, this area right here. This would be very optimistic if we can get back up there. Again, we would need something like a surprise rate cut, or move interest rates to zero, or something wild to get this thing back up there. All right, I don't know. So that's the outlook for that. Okay. So other than that, here, I want to show you guys something. Let's go to Bitcoin. I'm going to put Bitcoin up here. BTC. Actually, I'm going to go to the perp, right? Bitcoin perp. All right, I'm not going to do the Trade Scanner Pro. I'm not going to take any trades, but I want to show you this. So this is the Trade Scanner Pro. In fact, someone pointed this out the other day, that there was a trade that was open on the daily time frame. Look at this. It actually went to the profit objective. I mean, look at that. This is a huge move. And when we were looking at this, it was back here. And I'm like, yeah, I don't know about this. I don't know about this trade. And look at what this delivered. 10,000 points. I mean, I don't take trades on the daily time frame with this thing, but you can. You just have to have smaller size. But 10,000 points if you took this short. And there was some pain involved. There was some pain, clearly, but it never went to the stop. That was probably what? How much pain was that? That's part of the deal, man. Let's see. About 4,000 or 5,000 points of pain. And it went 10,000 points your way. Unbelievable, right? So even if you don't take that trade, the Trade Scanner Pro can at least give you some insight, can give you some idea of certain things, right? This momentum, it called a short, and it was anticipating a test of the low. And it's not that it's anticipating, it just projects based on previous price movement. That's what it's doing. It can't forecast the future. It's just looking at previous candle sizes, right? The ATR, and it's making projections based on that. So that's how it comes up with these numbers. Anyway, interesting, right? Also, let's just take a look at an hourly time frame. Something like this would be good for swing trades, right? If you're looking for swing trades with less risk. The trend is bearish, okay? And let's take a look. Just look at some of these trades here. They've been working out. How about this one? This one was a losing trade, 1,400 points. Ooh, that was no good. How about this one? 1,000 points, lost, no good. This one too. So a lot of stop outs here in recent days, right? This goes back a few days. No shorts on this move, but I'm willing to bet if we look at like a 30-minute chart or something, we go lower. Look, here we go. Was this a winner? Let's see. No, that wasn't. 1,000 points. How about this one? Oh, this one. Here's one. A winner. 794 points. All right. Now, that's based on the profit objective. Just so you know, the win and loss when I roll over this is based on the profit objective. It's not based on the runner. Okay. So let me show you something. This is, again, you learn how to use a Trade Scanner Pro. It's a very helpful tool. and I try to point that out each day or every other day when I'm streaming at 9:30, or I'm pointing this out. I mean, look, we have an entry right now on the hourly, on the 30-minute chart. It's got a lot of risk. You're looking at 2,500 points of risk, but your profit objective is going to be 1.5 times that if it gets there. You're looking at what, 3,600 points at the profit objective. Now, here's what I want to point out, though. Okay, this is the point that I want to make. Let's do a quick replay. Check this out. So the Trade Scanner Pro shows the profit was 794 points. That was the profit objective. Let's see what it would have been like if you had held on. We're going to replay. Okay, let me open this up a bit. I don't think that's the same trade because that's too small. All right, maybe it is. Okay, so here's what I want to show you. This is a 30-minute chart. So this is taking hours. How come it closed? Oh, I don't have the trailing stop on. That's why. Got to turn the trail. Got to make sure when you get the Trade Scanner Pro, you got to make sure you got to turn these things on. Okay? Make sure these are on. Don't turn counter trend trade on. Counter trend. Don't turn that on because that's going to be really tough to use in this environment. So let's just work on the trend side of things, right? So let's play that again. Let's replay that again. So check this out. So this trade, okay, this is a trade on a 30-minute chart. It goes to, we know it goes to the profit objective. Look at the trailing stop. Now let's see if this thing stays in, okay, and how much more it captures based on that trailing stop. Look at this. Look at this. This is where, if you can use this thing properly, like that's a huge trade. Look at this. Look at this. I'm going to measure this here in a moment, okay? So let's assume the next candle stops out on the trailing stop. This was the profit objective reported by the win there, right? 700 and whatever points, 790, whatever, right? That's something like that. That was the profit objective. The real trade, if you held on to it using the trailing stop, was 3,500 points. The risk on this trade was 540 points. So you do the math. Okay, now that's assuming it stops out at the trailing stop. The max profit, if you manage to randomly get out at the bottom, was 6,000 points, 6,100 points. That's nuts for 540 points of risk. Now, let's play it forward a bit and see if it stops out or where it stops out. So look at this. I was wrong on that trailing stop. There was more in it. There was more. Let's take a look. Where does this thing stop out? Maybe here? Okay, let's assume over here. Let's assume the next candle is probably going to stop out. So at this point, if you held on to the trailing stop, if you held on to something, right, you're looking at 5,300 points. The max profit, again, this is where I say max profit just to see what the trade was worth, 8,700 points. That's almost 10,000 points. Now, chances are you're not going to get the max profit because there's no way to know that this is the bottom, okay? But it was possible, all right? The possibility exists, just not a high probability. Let's see where this thing stops out. Okay, it stopped out. So I was right, about 5,400, whatever that was, okay? You see that? So the point is, when you catch one of these, or you're looking at this, this reported a profit of, because I have the trailing stop on now. This profit reported at 5,290, right? That's the trailing stop profit. Okay, this one was a loss of 1023. But you see, the point is, you see what kind of profit potential this thing can help you capture that otherwise you may not capture. That's the whole point of the trailing stop. Does that make sense, you guys? Really cool, right? Now, to do those playbacks, you have to have the highest version of TradingView because otherwise you can't do it on less than daily timeframes. But Wow, what a move. And obviously it took, let's see, how long was that trade? It stopped out about over here. How long was this trade? 71 hours. So that's 3 days, right? That was being in that trade for 3 days. I mean, that's a swing trade. So I just like to, even though I'm not taking any real trades here, that's just kind of highlights. Now, yeah, there's some losing trades in here. That's why you don't take every trade. And some of these trades that line up with what you're thinking or whatever, the way the structure's lined up, some of them are going to get stopped out. But, you're losing 500 points to make 5,000 points. That's the idea. And that's how you make money. Now, yes, there are lots of losing trades in here, but you don't take every trade. You want to line up, especially with the momentum. You want to line up with the bigger picture, right? If I'm using a 30-minute chart to take trades, that means I'm going to use a 4-hour chart or a daily chart to figure out my context. Like where are my support and resistance levels? Should I be going long? Should I be going short? Like that's the bigger picture answers that question. And then I use the smaller picture for confirmation. What you use as a bigger picture and what you use as a smaller picture is going to depend on the type of trades you're looking to take. Make sense? Anyway, so I just wanted to point that out. Some nice trades. Like if you want big moves, you have to use these larger time frames. I don't like to trade on these time frames because I prefer the smaller time frames. The risk is tighter and it's just more my style. Okay, like I do in the AM session. Does that make sense? So we'll go back to the bigger picture here. All right, you guys. So I covered all the stuff here today. And you can have trades occurring on multiple time frames at the same time. So it's important that you stick to your time frame and you don't jump around and stuff like that. Because if you do, it can be very confusing, especially switching back and forth between like counter trend and trend mode. In this environment, especially, I would just stay in trend mode because there's momentum. That's the whole point of trend mode, is capturing the momentum. Counter trend is really more for support and resistance levels. And because things are so wild and levels are breaking like dramatically, I would just hold off on that right now. All right? Make sense? So sometimes it's better to just wait for the trade setup to develop and use your notifications from TradingView than it is to just try to force trades. Right? Because you don't want to sit here in front of your computer for 3 hours waiting for a trade to set up. You simply go to your notifications and you set up a notification. Right? You just do this. And then you just fill all this in. You pick the Trade Scanner Pro from this over here, and then you just press OK or whatever, and it will tell you when there's a heads up. It'll tell you if it's stop loss or a trailing stop is touched or a profit objective is touched or if a signal pops up. So you'll get all that information, and you don't have to wait in front of your computer. All right, that's another thing. But in order to set up multiple notifications, you have to have a premium version. You notifications on the free version of TradingView, but you can only use one at a time. All right, makes sense? Okay, you guys. So any other questions about anything? Interesting times, huh? Interesting day. So I'll be back. If I don't have any questions, let me see. How many? Oh, I got my people from Twitter. All right. I could be doing better with these numbers, people. Again, do me a favor. Press the like, subscribe. Receive notifications for the channel. It really helps me out if you like this content. I mean, clearly someone likes my content because I got these repeat guys coming back from my AM session. They want to see this again, right? I mean, my AM session is not the same as this, but they don't get tired of my voice. So, join in the fun. If you have any questions, you could send me an email at mark@markpmarkets.com. You could send me messages here on TradingView. It takes me some time to get back to you sometimes, but I make the effort to get back to you. And we'll go from there. If you want to try out the Trade Scanner Pro, give it a try, 14 days. You can cancel it anytime. Just make sure that if you don't want to pay for it, you have to cancel it. I'm not going to cancel it for you. You can cancel it very easily through PayPal or however you signed up. You can cancel it on the website through your user profile. It's very easy to do. You have 14 days to do it. Don't wait till day 15 and then you get billed, right? If that was not your intention. I get people that do that. I'm like, what are you doing, man? Like, are you not, you know what I'm saying? UTXO, how are you? My question about uncovered puts was censored because apparently, hold on, if I click over here, now I can see. My question about uncovered puts was censored because apparently AI doing censoring. Really? You had a question? Oh, maybe because I have certain filters on here. Because remember, I used to get trolls on here all the time. I mean, things are so bad. Not even the trolls have time for me anymore, right? I mean, I used to remember like the Russian porn guy. So I have all these filters in here. Maybe you got filtered out because of that. But what was your question? Maybe you want to put it in here again. Uncovered puts, by the way, are a bad idea in this environment, and it's a good thing I was not selling any because I definitely would have been assigned. Let me see here. I just wanted to know, how do you feel about selling puts? Okay, that's my answer. Stay away. In fact, the trade that I had before, my Qs trade that I had a few weeks ago, I had 180 shares. One of the reasons why is because I got assigned on a put that I sold. It was at 474. I got assigned, and I had this short put. I mean, I had to buy 100 shares while this thing was at 470. And I was like, man, I do not want to have 100 shares from one price. I managed to get out of that trade at 482 because I sold the call against it. The market gave me the opportunity to get out. I sold the call against it. They took it away. Great. I was happy about that. But after that, I'm like, this is not the environment to be selling puts. It's tempting. Um, it's very tempting to do because you're going to get some very high premiums. You're going to get some very high premiums, but because the VIX is going nuts, right? Everyone is buying puts, so puts you're going to collect huge premiums. The thing is, if you're going to do it, like I have no put selling policy in this environment. Um, I'll tell you when it's good to sell puts. I'm going to show you. We can go to the Qs for that. Here, I'll switch this one over to the Q, because that's where I had the puts, right? I sold a put. I sold that put, by the way, like back here. I sold it like back here somewhere. And the market was nice enough to give me this rally. And I managed to get out of it, like I said. But the type of environment that you want to be selling puts in is a bullish environment, meaning we're making higher lows, right? And as long as we're basically stable and producing higher lows, if you're going to do it, that's when you should do it, or that's when you could do it. Once the support broke, right? Once that broke, that's really when you should lay off. Okay. Unless there was like a nice recovery, but there wasn't. That's when you should lay off because this structure is bearish. Now, of course, when you sell a put, you have to be prepared to take assignment. You have to be able to afford to. And that's why, you don't want to overdo selling puts because you get stuck with a lot of shares from really bad prices, especially in this environment. So to make a long story short, no put selling here. Until we get back to higher lows and higher highs, I am not selling puts. What I am trying to do is I'm trying to buy 10 more shares. So I have a 100 share position and I'm going to sell a call against my 100 shares. I'm just hoping we could do better than, we're at 426. I need to see like 450. We were close today, earlier. We were at 443. But I need to see like 450s, 460s. My average price is 463. So if we could get back up above there, I will be very happy to sell a call against my shares and to get the F out of this thing, because that's all I want to do right now. Is I'm not going to, I'll add, if I see some solid stability, I'll add my 10 shares. But if we keep going in a straight line lower and lower and lower, I'm not going to put on another 10 shares. I'll add on the way up in this case. Does that make sense? Because of the extreme nature of this environment. Okay. Oh, no problem. Yeah, I can imagine, man. It's rough. This is a tough environment. This is a tough market. And I mean, I managed to get away with that profit, earlier on that eval account. But man, that thing technically stopped out 2 times. But I stayed in. Now, there was a nice lesson from that. And that is, there's certain situations that only experience can help you get through. Because if you are a beginner, and I keep telling you, respect the stop, then you should have banged that thing out 2 times for a loss, right? But I managed to stay in that trade. Why? Because I saw the double bottom developing. I saw the heads up on the Trade Scanner Pro producing another potential signal. I only had one micro lot on instead of two. So my loss would have been not good, but it would have been smaller than usual. So I was willing to give it a chance. Plus, the general probability of the area was bullish, right? Only experience can teach you all that. You're not going to read that in a book. You just have to go through this stuff a lot of times. That's why I gave that trade a chance. But technically, it should have been stopped out. But it turned into a win because of my experience, right? And the market gave me the opportunity to get out at the 1 minute profit objective, as you saw, and I got out for a nice little profit, and that was it. Turn this thing off. So in this environment, definitely, want to keep your size smaller, widen your stops, keep your size smaller, or just don't trade. Let this market cool off a bit, because this is wild. NASDAQ moving 10 points a second is a little wild and very hard to trade. Like, you're not going to, if you have a 10-point stop, you're going to get blown out. As soon as you get in, you're going to get blown out. It's nuts. not 10 ticks, 10 stop, 10 points, which is 40 ticks on the NASDAQ. So wild, man, wild. Yeah, well, I appreciate that. A lot of people don't say that at UTXO. I got my regulars here. You guys are my regulars. You guys like me no matter what I say. But no, I appreciate it. My 5 regulars. At least someone watched. Like I was saying, if it weren't for you guys, I'd be talking to myself for an hour. Not like I don't do that anyway, but still, you know what I'm saying. So, all right. So, yeah, some very good lessons in that stream. Hopefully Wednesday we'll have a better time. It would be nice if I could just take a trade and have it go my way the first time and I could be done with it, right? That's what I'd like. All right, people. So again, I'm going to wrap this up. I really appreciate your time with me here today. I hope you learned something and got some insight as this week unfolds. Whatever you do, don't overreact. Don't react to news. Let the market figure it out, okay? Watch levels, watch price structure. Yes, the momentum is bearish right now, but you have to consider probabilities, and we are at a location where probability favors a reversal. Whether we get that or not is another story, but that's what probability favors. And just like in poker, you got to play with the probabilities, because you have to look at trades over thousands of trades, or, in poker, thousands of hands, not one. So please keep that in mind, right? Don't blame yourself if you have a bad outcome. This is a wild environment and very unusual. I mean, I have a lot of experience, and even I would avoid a lot of this, okay? Because that's the best thing to do. Just avoid. It's easy. All right, you guys. All right, so, hey, I'll be back on Wednesday. You know where to find me. All right, and then we'll go from there. If you have any questions, you know where to find me as well. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.